Hello and welcome to today's Fat Tail Daily. It's another week and it's a big week. First of all, we've got the massive event taking place this week, the Melbourne Cup, but also over in our in the States, the US election. Ryan, are you paying much attention? How are you doing?
Yeah, good. Thanks. Yeah, I'm paying attention. I suppose both of them are a bit of punts at the moment, aren't they? No one seems to know who's going to win this U.S. election. I was following the polls over the weekend because the betting site the odds on Trump fell pretty sharply, and the price of Bitcoin fell a little bit with that as well. So I was checking out the polls and that. And there's some strange polls, but it seems that no one really knows who's going to win, and we might not even know by Tuesday or Wednesday who's actually won. There's talk of 12 days to get a result from some states and stuff like that. So for investors, could be chaos. At least with the Melbourne Cup on Tuesday, by about 10 past 3 or quarter past 3, you'll know if you've lost your money or not.
Yeah, well, just on the polls thing, I was chatting to a friend on the weekend, and they made a good point. Like, it's the betting odds that tend to get it right over the polls.
Yeah, that's true. There's a betting market called Polymarket, which has got over, I think it's close to $3 billion worth of bets on it over the election cycle, and it was favoring Trump quite heavily until late last week. He was about 64%, 65% chance of winning according to the betting market, but then over the weekend he's come right back into about 53, 54%. And then there was a few traditional polls out in the US with one lady who apparently is quite respected had Iowa as potentially going to Kamala Harris, and that was meant to be a Republican stronghold. So that's through the cat amongst the pigeons, and the odds are shifting around, and people are putting money down. So yeah, I think prediction markets are an interesting innovation because, like you said, people are putting real money down, and they have got a history of being a little bit more accurate. But we'll see if that plays out
Yeah,
this
yeah.
time.
But we'll leave the election there. I mean, there's loads of things on the news, and people can get all what you want on the mainstream, and it's all a load of noise,
Yeah.
really. We'll see what happens, but we'll be watching the markets very, very closely. Now, you've been today's piece. You kind of acknowledged the election and the week it is, but then you're really drawing an interesting parallel between Bitcoin and crude oil, suggesting that Bitcoin is really a form of stored monetary energy. Now, I find that idea quite interesting, but it might sound very strange to some people that are new to that sort of idea. Can you kind of elaborate on that analogy and how it might help investors understand the way you view Bitcoin too?
Yeah, so it is a bit of an esoteric idea, understand that. But let's give an example of if I was to find a barrel of crude oil from 100 years ago, it has the exact same amount of energy that it had 100 years ago. I can do the exact same amount of things with it. Doesn't matter that 100 years have passed, the energy is still there. Now, if I found a barrel worth of $100 bills from 100 years ago, let's say it was $10,000 worth, today that can buy a lot less than it could 100 years ago. All right.
99% less, I believe.
99%, yeah, yeah. So we know that the currency we use in day-to-day terms doesn't store value over time very well. It does it okay in the short term, so we can buy and sell stuff with it, except for maybe the last few years with inflation in double digits. But over the long term, it's a terrible store of value. Now, one way of conceptualizing Bitcoin, because it is a new thing, it's never existed before, is to think of it like a commodity, like oil, except it's a digital commodity. And this is an idea Michael Saylor at MicroStrategy has put forward before, and people get a little bit confused with it because he says it's like stored monetary energy. Now, he's not trying to say that you can create energy with this money, but what he's saying, it has the same features that if you store Bitcoin over longer time frames, well, not even that long, but over years, um, so far at least, it holds its value. It actually increases its value pretty radically over time. But the idea is over the long term is that, one Bitcoin held for 10 years will buy a lot more in 10 years from now than what one Bitcoin can now. And I've got a very good example from my own history because I got involved in Bitcoin in 2013-14, and I bought my first Bitcoin for about $600, right? So, we're talking it's close to 100,000 Aussie right now. Now, back then, you probably needed about 3,000 Bitcoin to buy the average Australian house. So you do the maths, that's how much it worked out. Today, it costs less than 10 Bitcoin to buy the average Australian house. So you can see as something that stores monetary energy, as something that stores its value over time that you can use in the future. That's the idea Michael Saylor was trying to get across, that Bitcoin is a store of monetary energy in the same way that a barrel of crude oil keeps its energy over time. Bitcoin keeps its purchasing power over time,
So I was
and
going to
that's
say it's like an analogy for purchasing power. That's similar characteristics to gold then, really, or would you
yeah.
say? I mean, gold's obviously been proven out for a lot longer.
It is, yeah, exactly. It's a very similar way of thinking about gold in some senses, except remember, gold's a commodity. So gold's a commodity like oil, iron ore, copper, they're all commodities. Bitcoin is a little bit different. It's a digital commodity, and it's a new type of digital commodity. It's the first digital commodity. We've never had a commodity that's lives solely in the digital world, and that means some people can't fathom how can that have value, what can it do. But the sort of analogy, I sort of extended Sailor's analogy about monetary energy today, and I said, look, think of crude oil. Crude oil by itself doesn't do anything, it's valuable because people can do stuff with it. But to do that, you have to refine it. Sometimes you have to change it into something that can be used, like change it into petrol for your car, or jet fuel, or diesel, or plastic, or whatever you want to change it. So you've got a raw commodity which has value, but then it has additional value because it can be converted into other use cases, and that is sort of what MicroStrategy is doing with Bitcoin on its company balance sheet. So people might know they're buying Bitcoin, and they've been doing it for 4 years, and they've been trying to find ever more exotic ways of putting Bitcoin on their company balance sheet. And it's meant they've been the best performing stock over the last 4 years. The shareholder value they've created has been immense, and that's been through all sorts of Bitcoin cycles. So they're not just riding this Bitcoin bull. They've ridden a bear market, bull market. But what they're doing is interesting because they're taking raw Bitcoin, as it were, and they're saying, well, one of the features of Bitcoin is that it's really volatile. The price goes up and down. How can we package that in a way that mainstream financial investors will like that characteristic, but they don't want the volatility of Bitcoin? So what they've been doing is they've been raising money via something called convertible bonds on their company. Now, convertible bond is like a loan. Except you've got the option at the end of the term, or a certain point, to convert it into shares instead. So you don't need to get your money back. You can just take shares in the company instead. So they raise this money of bond holders, and they're borrowing this money for less than 1%. People are basically giving them free money. MicroStrategy take that money, they buy Bitcoin, they put it on the company balance sheet. That makes their share price even more volatile because they're buying more Bitcoin. But that volatility has value. So this is the key thing they've worked out. They've worked out this volatility is valuable to the bond investor. Even the ups and downs doesn't matter, because if they've got an option of buying shares, then if something's volatile, it's got more chance of hitting the high price. It might have more chance of hitting the low price as well, but it's got that wider range. If you're buying something that's not volatile, it trades in a small band. It's not got much chance of doing that.
Yeah.
So basically, what they've done is they've used this raw Bitcoin, they've converted it into a financial product that corporate bond investors can invest in, because they're not usually allowed to invest in Bitcoin. It's not within their investment mandate, but they're allowed to invest in the corporate bonds of MicroStrategy, and by doing so, they get an exposure to a feature of Bitcoin, the volatility. And the returns on these bonds have been immense for bond. So remember, bond investors are like the safe investors. They don't want the risk, and yet they're giving money to this company that invests in Bitcoin. And by doing so, they've been getting returns of 40, 50, 90%. Some of the first tranches are up 226%. Now, in the world of corporate bonds, that's unheard of. That's crazy returns. So every time MicroStrategy goes to raise more money via these convertible bonds, they're oversubscribed. Investors want to chuck money at them. So that's the sort of the analogy I was given is MicroStrategy were using Bitcoin in its raw form, converting it into something else that had another use case to a different type of investor. And you can see that with Bitcoin in a number of different areas as well. So people always think Bitcoin is just one thing, and they might not fully understand what it is, but it can be different things, and it can be manipulated into different use cases.
How do you see that model potentially influencing other companies' approaches to Bitcoin investment?
So think about this, right? MicroStrategy have been doing this for 4 years. They were mocked and ridiculed a lot of the time for that, and yet they're the best performing stock in the last 4 years. They've made huge returns. So that has made some companies sit up and take notice. There have been a few copycats recently. Semler Scientific, there's a Japanese company called Metaplanet, and a few other ones, but they're mostly smaller names who've started trying to do their own version of this strategy, put Bitcoin on their company balance sheet. It doesn't quite work as well for them as it does for MicroStrategy because they don't have the options market that MicroStrategy does to make use of that volatility. But right now, they're just trying to add Bitcoin onto their balance sheet and say, well, this will mean our company will last 20 years. If I've got
And
500 million, sorry.
oh no, I was going to say, how much is it down to like the influencer type personality of the CEO or the
Yeah, it
chairman,
does. Yeah,
Michael
well, that's
Taylor?
the thing. MicroStrategy is run by Michael Saylor, who could implement this. It's very hard for a sort of normal business with a board to do that. But Microsoft, the big Microsoft, third biggest listed company in the world, Bill Gates run company, it's got its AGM on the 10th of December, and one of the line items to be voted on by shareholders is investing. Is called investing in Bitcoin. So some shareholder, with probably a sophisticated shareholder, has got this thing on the agenda of Microsoft's board meeting. Now that's not an easy feat to do. No, I can't just put an agenda an item on Microsoft's board meeting. So on the 10th of December, they're going to vote on the idea of them investing in Bitcoin. If that happened, that would make every other big tech company sit up and take notice. But I should say the board, so the people that run the company, have advised investors to vote against it. They're not necessarily for it. But if the shareholders vote for it, then they can put their own board members in to implement it. And you've got to remember, you've got companies like BlackRock and Fidelity who are major shareholders of Microsoft, and they have Bitcoin ETFs, and they're the ones going around pushing this idea these days as Bitcoin as a digital store of value asset. So it's not just me at Fat Tail Investment Research and maybe Sam Volkering over in the UK doing it. It's now these serious players, and they're getting this idea on AGMs of big major companies. There were rumors as well of a company like Dell, which is run by, again, like you said, like a big CEO figure, Michael Dell, that he's investing in Bitcoin. Not sure if we've seen any confirmation of that. But Tesla still has Bitcoin on its balance sheet that Elon Musk has had there, for about 4 or 5 years now. They've kept it. They've not sold it. So I think if you think about it this way, right, what does game theory say? If one person in the market is doing something and it's consistently making money, if other people start copying him and they start making money, other CEOs have to at least have to justify why they're not doing it. So they can ignore it for a while, but at some point, like what will happen at Microsoft, if they vote against it, the board will have to say their reasons why, and that's on the record. So there's a game theory here that says it used to be a risk to do what Michael Saylor's doing at MicroStrategy, but now it might be a risk not to do it. Because if you're wrong and Bitcoin keeps accruing value, and it means whoever adopted it first is accruing more value because they're getting in cheaper, you are putting your company at a competitive disadvantage because you don't have that source of capital, you don't have that source of shareholder accretion. So I think the next year will be interesting if we do see a big company copy it. Then it's the same thing as a big nation state adopting it. There's that game theory in play which says if you don't do it and they do it, you could find yourself far behind in the next 2 or 3 years.
You also talk about you mentioned like various Bitcoin refineries
Yeah.
creating value in different ways, from DeFi to say heating towns. Which of these use cases do you think has the most potential to drive actual Bitcoin adoption in the coming years?
Yeah, so again, this comes back to the point as the crude capital, which crude oil analogy of there's lots of people doing stuff with Bitcoin beyond just buying it and holding it and investing in it. There's people using it as the rails of a new DeFi ecosystem where you can do transactions without using banks, and I think that's probably the best potential path to adoption when people are using Bitcoin behind the scene without even knowing about it because they're just more efficient layers. I think
Yeah.
that'll be the adoption thing. But probably the most interesting area of adoption right now is in energy markets, which is, again, coincidentally back to the whole energy idea, which Bitcoin mining, which is the process of sort of verifying the whole blockchain, uses power to do that, right? Now, the thing we've got with the renewable build out we've got in the world right now is renewables might be great for CO2 emissions, but the electricity that comes is variable. You can't control when the wind blows or the sun shines. And so the electricity generated goes up and down. And that's different from what the system we're in now. Right now, they can sort of turn coal power plants on and off so that supply meets demand. Because you've got to, with the electricity system, you have to make sure that supply meets demand. You can't have excess supply because it has to go somewhere. With renewables, that's hard. You can't turn off the sun. You can't turn off the wind. And so, what Bitcoin miners right now are doing right now is they're soaking up any excess electricity generation, and by doing that, they're helping stabilize the grid. Now they're doing that in Texas, in a massive state like Texas, and there's people there who are not Bitcoiners; they're just electricity people who love Bitcoin because when you've got this excess energy generation, they come in and they soak it up. And when you don't have enough energy, Bitcoin miners can power down incrementally to give more power back to the grid. So they've got these agreements with these Bitcoin miners called sort of purchasing agreements, where that's the agreement. You know, when we need the electricity, you turn off, and when we don't need it, you take it. And so that is helping keep the grid stable, and it's also helping keeping power prices down. So it's a win-win, and that's through people that are not necessarily aligned with Bitcoin as the economic angle or the investment angle, but they just like the fact that Bitcoin mining can do that. There's another company in Africa called Gridless, which is using stranded renewable assets, say like a hydro dam out in the middle of nowhere, Africa, right? That could create electricity, but what's the point? Because no one lives near it. But what they're doing is they're setting up Bitcoin mining operations there, which generates revenue for these communities, and they're then using that money to create infrastructure for these communities in places, you know, maybe not near the hydro electricity plant. So they're using Bitcoin mining to monetize stranded renewable energy sources, and they're doing brilliant in Africa. This company called Gridless, just an entrepreneurial company, they're actually creating like little micro electricity grids all over Africa for these rural communities. So there's a lot of stuff you don't hear about Bitcoin, where people are using the features of Bitcoin. Like you said before, a town in Norway on the edge of the Arctic Circle is using the heat produced by Bitcoin mining to heat their buildings. So it's using a waste product and converting it into something useful while generating money for themselves at the same time, because you get money for Bitcoin mining as well. So they're all. I think the energy side is really interesting. What can you do with Bitcoin mining and energy markets? How that can make the grid more reliable and more cost efficient. I think it's something I've not heard in the mainstream, but it's a big idea that's spread really fast in the Bitcoin ecosystem. But coming back to your question, what's going to get average punters, you know, more involved? Well, you've got the ETFs these days where people are starting to see the investment angle, but the sort of DeFi stuff where you might have an app that can transfer money, get a loan, do something, and it's using the Bitcoin blockchain behind the scenes, I think that's coming pretty fast as well.
I guess just like we use the Swift network behind the scenes, you don't actually know you're using it, right?
Exactly, yeah. There's a whole archaic financial system behind the scenes that you don't know what you're using. Even the apps you've got on your phone, like you said, there's like, you know, 5 or 6 different intermediaries every time you do a share trade or transfer money. You don't know about that. You just use your app, right?
Yeah.
But you pay a cost for that. So can Bitcoin redesign that system to make it less risky and more cost efficient? Probably can. It will take time for that to come out.
No, I found the whole comparison to the 19th century oil barons very intriguing. I mean, I was going to ask, like, how do you see the current phase of Bitcoin development comparing to the early days of the oil industry, and what lessons can investors learn from the parallel, do you think?
So if you think about the sort of oil boom of the 19th century, if you've ever seen that film, There Will Be Blood, which is a great film with Daniel Day-Lewis, I think. What is at the start, the main thing is to get the supply, to get the oil. And I think right now that's the phase we're in now is buy some Bitcoin. You know, get some Bitcoin, start small if you want, learn about it. But you've got to remember, Bitcoin is the only commodity in the world with a fixed supply. You know, if the price of gold goes up, miners can look for more gold and increase the supply. If the price of oil goes up, people can look for more oil. But with Bitcoin, it doesn't matter how far the price goes up, they can't look for any more. There's only going to be 21 million Bitcoin released over the next 130 odd years. Sorry, I've got a kid asking me for Mandarin.
I was just listening to his insight there.
Yeah, but that's the whole point. You've got this commodity which is fixed in supply. It's price agnostic. The price can go as high as you want, and no one can create any more of it. So knowing there's all these potential sources of adoption, which might take years to play out, but knowing that the first stage we're in now is like like the early oil people tried to find the gushers, tried to find a way you can add Bitcoin to your own personal balance sheet, And then you hold for now and you follow the story and you try and understand where it's going. But that scarcity right now is the main reason you should buy. The absolute scarcity, then you can see these different use cases play out, see these different refineries play out. And, we've gone a long way in my 10 years in Bitcoin from absolute skepticism and ridicule to the point where you've got BlackRock now promoting it to their clients. You know what I mean? Like we've gone a fair way already. And the next step is when everyone just has some and it's just a normal part of your investment portfolio. But we're not there yet, and that's the opportunity right now. By the time we get there, the price reacts.
Final question, Ryan, just to bring it back to circling back to where we started. Obviously, but this conversation is going to be out on our YouTube channel for a while. But we're recording it 2 days before the election. Do you think the result of that is negligible on the Bitcoin story, or do you think it will be speeded up or slowed down depending on who wins?
I sort of said in today's piece, look, at the end of the day, if Trump wins or Kamala wins, it doesn't matter. The debt and deficit situation in the US is on a one-way trajectory higher. None of them have any plans to rein in the deficit. $1 trillion of new debt added every 100 days. Doesn't matter who wins. So nothing changes that story that the US dollar's on, where they've got this debt that they can't seem to rein in. And that is the primary sort of valuation driver of Bitcoin right now. It stands in comparison to that system of never-ending money and debt, fixed supply, scarce. So nothing stops that. In the short term, I think Trump, who's obviously voiced support for Bitcoin and crypto in general, that will give things a sugar hit. So if he wins, things could go nuts in the next few months. If Kamala wins, you might get a little bit of a bit more time in the doldrums, but none of that changes the Bitcoin value proposition. And I think the road we're on in terms of that is pretty much unstoppable at this point.
Thanks, Ryan. Always good to hear from you, mate. Always look forward to the Monday discussion. Not that I don't for the other editors, but I always particularly look forward to Monday's one. So thanks for your insights, mate, and have a great week. See you next week.
Cheers.